All right, folks, welcome back. This is part 2 of a 4-part series titled Ends. All right, as I mentioned in the first episode, there was 4 parts to this teaching series, and it's aimed at giving you obviously the mindset of applying the things that I teach you on this channel to kind of come up with a creative approach to using the information in your personal life. And while it won't match everyone's personal life and or the limitations that each of you have, it's meant to spur on creativity on your part. Bring your own personal creativity and experience into the equation, because trading is absolutely a unique solo sport. It's not a team venture, and you need to be able to tackle these things on your own. All of you are going to be coming from different walks of life. That means either you're going to be more fluent than the next or broke like I was when I first started out. So this particular series is more of a mindset and a practical approach to what you've already been trained to look for in price charts. Okay, so the 4th part will be like a nuts and bolts type thing. So I know most of you are probably already bored with this approach, but I promise you, if you go out there and you try to trade and you try to make money and you crash and burn, this is going to be one of those episodes. If anyone comes to me and asks, hey, look, I've tried trading, I tried making money, I lost, what series do you recommend? This one. Okay, this one here, because this is going to give you the right mindset going into trading if you've already failed. And specifically for those individuals that have yet to trade with live money, if you approach the marketplace and your life with these ideas, I think you'll be better equipped to succeed. I can't promise that you're going to succeed. No mentor can do that. I am certainly not going to co-sign and say, I guarantee you're going to make money. Okay, I can't do that. But I think you'll have the best advantages in your favor having these insights versus having no understanding about what's available to you. So the first episode was dealing with the problem. Episode 2 of the 4-part series is now the solution. Now, the solution to the problem that we mentioned everyone has is making ends meet. Well, the solution is additional income source. So I'm proposing the practice of learning how to read these markets that could, not that I promise you, not that I can guarantee, because I'm not, it could be a possible income stream for you in more ways than you probably are aware of. And I'm going to hopefully open your eyes up to that here. And if you look at it from that perspective, I think you'll find new motivation that may not have been available to you prior to thinking like this. So I'm going to talk about how you can run your life like a business, which is important because they don't teach these types of things in school. And also to understand that what may feel impossible right now, you need to change that perspective to I'm possible. You are possible. You can succeed at this. All right, just a real quick recap. Episode 1, we talked about the problem. The problem is we only have so much income when we have a job, okay, which is just over broke. The living expenses everyone has is going to be a variable. Okay, some of us have much more extravagant living expenses and lifestyles and the costs associated with it. And then there's other folks that, like when I came up, I was broke. I wasn't making very much money. I had very little understanding about what it felt like to have money in the bank, because I really didn't have a bank account. I would take my checks that I would get paid each week and go to a check cashing service, and I would pay a fee for that. And there's a lot of folks out there that still do that. But the problem is you have to come up with more income. Now, the income that you get from your job is obviously static. It's limited to whatever your employer feels that you're worth and whatever the pay rate is for that skill that they've hired you for, or that workload that they expect you to do. That's it. That's all you can get unless you do overtime. And that's a limited income stream. Now, do you have enough time to have a secondary job? Working 2 full-time jobs is very difficult. I've done that before. It's not fun. You have no life. You'll find yourself getting sick easily because your body's run down. A full-time job with a part-time job is hard. I've done that too. So does your time allow you to have that second job income? that might not be practical for you. And if it isn't, don't be ashamed. Don't be discouraged, because what you're delving into here could potentially open up a whole new broad stream of income options. The solution. Now, obviously, the employment income is a static income source. Many people come to me all the time and say, hey, look, how fast do you think I can get to trading live money, real time, and doing it for a living? And honestly, if you've been ignoring this every time I mention it, there are times where you'll get into this industry and you'll be met with initial luck. I had a bout of luck in the early goings of my career. And then I found out quickly that I really didn't know what I was doing because I was too immature. I didn't have the understanding about what the markets would likely do. And you're going to have that too. But if you've ever felt the wonderful feeling of being profitable with a live account, that bug bite, once that gets in you, you are absolutely ruined for life, because you know what it feels like. So you're going to always chase after that. There's a way to do this properly. And I didn't have these understandings when I first started. So as a business owner, entrepreneur, things change your way of thinking when you start running businesses. And you apply those experiences and wisdom to things that you do in all facets of money making. So your income right now, if you have a paying job, be thankful. I know it sucks. I know you want to leave it. I wanted to leave mine as well. But you need to make ends meet right now. And trading isn't there yet as an income stream. You're just learning how to do it. Or maybe you're hit and miss and you're just above break even or just below break even. If you aren't blowing accounts, you are actually in a very good place from a career stance, because you are not wrecking yourself and blowing the account out. So keep the income coming in. That's as long as you're showing up for work and doing what you're supposed to be doing and your employer finds value in you and they're solvent as a company, you have an income stream that is likely to continue as long as you keep doing what you're expected to do there. So keep that. If you have children or a spouse, they're relying on that income just as much as you are. So understand that it's a normal feeling for you to want to escape that rat race. But don't be so, I guess, impatient to think that you're going to be ready to leave it when you're really not. Additional income sources by learning how to read these markets will avail you potential investment income. Now that category, investment income, we're going to talk about that in subcategories. But additionally, once you understand this industry and what's available to you in terms of income stream options, you can create business income from it as well. So now you have three major classifications of potential income streams that could be pouring into you, the incorporation of you, the entity, the corporate entity that is you. Whatever your name is, me, Michael, ICT Incorporated, whatever. You're going to create an entity in the world. It may be multiple entities, and we'll talk about that as I go, but these income streams are going to be pouring into you, and you're going to be using that income to create more income and open up doors and opportunities for you to increase your income. So that way you're not limiting yourself just to whatever your boss and your employment is paying you. You're building up your incorporation of yourself to replace the necessity of that employment income that comes from your job. But you're not going to expect it to happen right away. You're investing in yourself with a plan of action. Okay, so I'm providing you a solution. This is an idea. This is a mindset going forward. If you don't want to subscribe to this, then obviously you're welcome to go out there and just roll the dice and think trading is going to be easy for you and then learn otherwise. Now, the employment income, my first suggestion is, again, be thankful that you have your job. There's a lot of people out there that don't have a job and or not gainfully employed. If you are gainfully employed, be thankful for it. Don't spend frivolously. Save. Put money aside. Cut expenses. The first episode, I talked about how you got to go through and trim the fat. The things that you really don't need, get rid of it now, because that's going to help you have more money to allocate to resources, computers, learning resources. And I'm not talking about courses. I'm talking about things like note-taking, things that will help you study better and be more organized. And it's not a great deal of expenses, but those things cost, and they're not always entirely free. So while you get the benefit of me teaching you with 30 years experience and real world experience, losing real money, making real money, teaching lots of people all around the world, different walks of life, I have experience, and I'm giving that. I'm pouring myself into you for free because I want to see you succeed. I want to see you do well. But I don't want to see you do the same things that I did early on and defer success, defer learning properly, and equipping yourself with the resources and wisdom that would really never come to you. And there's a lot of people out there that have courses and things, and they still won't talk to you like this, because my opinion is they're only making money from what they sell. Okay. And if you can't make money from the things that you're selling the information about, then you really are limited as a mentor. You're limited as an educator. You're limited as someone that would be a resource of wisdom. So keep the job. You're going to need it. And the ideal scenario is you're going to replace this income. It may seem impossible right now, but I assure you it is possible. Not for everyone. I'm not guaranteeing it, but it is absolutely possible. All right, now investment income. Learning how to read the markets, as I teach on this YouTube channel and in the mentorship lessons and lectures. I teach you how to sit down in front of these charts and decipher what it is that the market's likely to do next. Now, that doesn't mean profitable trading. That's something that you have to learn for yourself. Now, I'll give you concepts. I'll give you ideas on how to anticipate specific events unfolding, certain times of the day, certain days of the week, certain months of the year. Those factors are, well, simply tools. They're conceptual ideas. You as the operator, when you're learning how to do this, you're going to read into it with your personal limited exposure to doing this and your overzealous approach to just diving in, not really knowing what it is going to be the consequence, or ignoring the potential consequence of pain and loss and monetary loss that would otherwise not be considered as a new trader because we get pip drunk or, well, blinded to the idea that when the losses come and when you lose money, that's a real occurrence where the money is absolutely leaving your account, versus watching a demo account go and draw down. You don't really feel that. So all those things are going to be translated to a real world experience that none of you are really prepared for. And for those that have experienced it, you know exactly what I'm talking about. But income coming from investments, it can come from a speculative account where you're trading just to build money up and you're taxed on that. I'm not a CPA. I'm going to talk about certain things here that may be the right questions for you to go to your CPA and ask. Maybe you have more information. So I'm not acting as a tax advisor here. Okay, I'm not acting as a financial advisor. I'm not acting as a certified trade accountant. Okay, I am simply just having a discussion with you. We're friends. Okay, and I'm trying to equip you with the right things to ask the professionals that do taxes, the people that help set up corporations. And what do I mean by that? I have the S Corp. Okay, that to me is the best approach for an entrepreneur. It provides pass-through income. So whatever your businesses make, that income passes through you. Okay, and you don't have to pay the double tax that a C Corp, which would be required by a C Corp. And what do I mean by that? There's taxation, when you create income streams through business or business entities and LLCs, the S Corp has the benefit of doing basically half of the normal taxation that you would have in either the C Corp or other means of income. So there's benefits to having a specific type of LLC, but your unique circumstances may require or limit you from the use of an S Corp. Now, I'm speaking directly to the American populace in my community, obviously. If you're outside the United States, I don't have any insight for you there, okay? But the general ideas I'm talking about here, I'm sure that there's something as close as what I'm referring to here in your own country, or maybe not. And I can't compensate for that, obviously. I'm just trying to do the best I can working with, the community at large. I have to only speak from personal experience in the things I either know and or at least point in the right direction. But investment income comes by way of speculative accounts where you just go in, you trade retail account and try to make money with it. There's also deferred tax vehicles like IRAs and Roth IRAs and 401ks. As investment income, you can build huge nest eggs for retirement, applying the information with sound investment logic. And if you're correct, by not being taxed on that every year and giving up large portions of what you gained, that stays in there, and that compounding effect really takes effect over time. So my idea is to try to spur on the notion of putting your heaviest lifting into accounts like that. Not, I need to double my account that I opened up with Oanda, Forex.com, TD Ameritrade. Those accounts that you're trying to dig into each week or month and getting expenses out to meet your ends. Those accounts, you want to trade those soberly. Kind of like what I've adopted this whole series with. But apply the heavy lifting of compound interest and really working towards growing the tax deferred accounts like a Roth IRA, which is really, like, in theory, it's limitless on how fast. I mean, there's people that have made billions and billions of dollars with Roth IRAs. And while that is available to us in the United States, that should be tapped into. So you can create an account with a Roth, self-directed, and you can go out there and make the decisions on what you're trading, what investment vehicles you're using, what stocks you're purchasing and trading. And you won't have to worry about the implications of the taxes and the burden of meeting the taxation requirements at the end of each year, because it's tax deferred. So it allows the compounding effect to really grow. So I want you to think about that, young folks that are listening, okay? Because when I first started investing, like Morningstar was the thing coming up, and Morningstar was like the big deal with mutual funds. Mutual funds became a thing when I was younger, and everybody's like, wow, this is really good, and they sold you on the idea that, stocks on average yield about 12%, not every year, but 12% across the board. And everybody did their calculator thing like you do when you first start learning how to trade Forex. I got this much money. If I do this many pips every 10 minutes, I can make this much money, and I can buy a house when I'm, 6 months from now. You know what you've done. I did the same stuff. I was 20 years old before. But these ideas of chasing immediate wealth should be controlled. And meeting your needs through trading modularly. That means taking one bill at a time, not thinking about investment income like I have to have that money right now, but deferring that growth and maximizing it with tax deferment vehicles like a Roth IRA or a self-directed IRA. In the United States, we had the benefit of doing that. I'll talk a little bit about that in a moment when we get into business income, but these ideas of splitting the investment income into different branches, it may seem complex right now, but I promise you there's a lot of good books out there on the general ideas, not necessarily how to trade them yourself. I think that my channel gives you the insights on how you can at least begin to attack that idea. But the approaches of setting up an individual IRA or a simple IRA or a Roth IRA inside of a corporation like an LLC, they can have an investment account, a long-term IRA. And I want you to think about how if you learn how to do what it is I teach on this channel, read the charts, okay? That opens up so many different business opportunities, which brings you what? Business income. Now, if you have an LLC, that means your liability is limited. So the business itself shields you to a certain degree. And if you're going to be doing like real estate, okay, you want to create an LLC so that way it creates privacy. It prevents the general public to see, like they can't just pull up properties and say, okay, let me look up Michael Joe Huddleston and see what he has in this area. When you have a LLC or your contributions as a partner in an LLC where properties may be held in an entity that you are part of, but you're not putting yourself out there. Okay, so it provides you a means of shielding. When you have a LLC for your business income, what are you doing? Like, what's the business that you're running? Well, I want you to think about how, if you learned how to do this well, okay, because this is the other question I get a lot. How much money do I need to start trading real time, not need a job? That question is answered by you. But my canned response is you need to be in a position where you already can make 2 times what your monthly income is right now. So that way you're meeting your monthly expenses by at least 2 times. And you've been doing that for a while. What is a while? I think a minimum a year of doing just that. And have $100,000 in your disposal. Now, some of you, I saw this in some of the comments, oh, you're just saying something that's impossible to us right now. That's the target of this episode, turning impossible to I'm possible. See, you're skipping over this period of time where, like, it's usually young guys. They come to me or they come to other mentors and they say, hey, teach me how to trade. Okay, I'll sit down with you and I'll show you how to trade. I'll teach you how to do analysis and find setups and how to handle losses. And they're impatient through that. And even if they get to the point where they understand the model, they understand how to trade, they understand how to read price action, they want to jump over from where they're working right now, punching the clock for 40 hours or more, and they want to go right to wealthy Instagram lifestyle. And what they don't understand is 99.99999% of those folks are selling information or selling an idea or image, and they're not really making profits trading. Now, I'm not here to dump on them. You already know my opinion about that. But that income they're making, I guarantee you they're not even managing that properly. So you're trying to have unrealistic expectations about a shoestring budget approach to starting how to trade, and you want champagne wishes and caviar dreams in 6 months or less. And some of you complain, you kick and scream when I tell you have to at least submit to 1 year of learning. Without that, you don't have it. Anybody that tells you anything less than a full year, they're lying to you. So your business income, once you understand what it is you're doing with these charts, what type of business income can be made available to you? Well, let's talk about that. We're going back to the income to monthly expenses, and we're going to revisit this. Obviously, you have employment income if you're gainfully employed. Put that aside. That's going to stay there until you get to the point where you're able to make 2 times your monthly income requirements now and meeting your ends twice over. So in other words, if your income expenses are $4,000 a month, you are consistently able to do $8,000 a month. Now, while you're doing that, you're saving money. What are you doing that for? Because you don't want to have cash starvation. In other words, you don't want to be drowning in debt, and just because you know you can lean on experience of, I can make $8,000 a month. I've been consistent with it for a year. Okay, that's wonderful. But something magical happens when you cut the umbilical cord away from that job. See, you hate your job right now. You hate it, as you should. You should be looking to leave that. Okay? If someone offered you twice the amount of money you get paid right now, doing the same job you're doing right now, how fast would it take you to want to leave it? You'd hate that job immediately because you see what? An opportunity. So I'm trying to open your eyes to the opportunity that understanding these markets can provide you. So leaving the employment income as it is and telling you submit to it, stay with it until you can afford to leave it. Let's go into the discussion of investment income first. So investment income, we have that in the form of immediate, right now, speculative accounts, retail trading. Then we have long-term tax-deferred IRA income, which we're not trying to spend. That income is wealth building. It's wealth generating income. That's not the same thing as give me my money right now. I made my money. I did a withdrawal this month. I'm wanting to spend it. Okay, that's not the same as that. Most of your heavy lifting in your work and effort should be placed on the long-term tax-deferred IRA approach. Now, you're probably thinking, he's talking about putting more of my money each week from my paycheck into my company IRA that I don't invest in anyway. Well, you shouldn't. If you have one of those, roll that into a self-directed IRA, something that you can control the trading in, and then start maximizing your efforts in trying to grow that and doing the maximum contributions to that each year. Now, business income. Once you learn how to do this, you don't have to actually trade a live account. Think about that. I have a lot of folks all around the world, and some of them are in impoverished nations, and they don't have a lot of money. So how do they get to the point where they can afford to start trading? Well, I encourage my students, and I give them my blessing, that once they learn how to trade, they can do trade calls or trade analysis and literally do that on their YouTube channel. In other words, share their opinion about what the market's likely to do, and or do live streams with them. And that can grow an audience, and that audience could translate into ad revenue, which is income. And we haven't even started talking about trading a live account yet. See what just happened right there? You may not have the means to trade with a lot of money right now, to leave your job. You may not even be employed. You don't need that. Ad revenue from YouTube could be a income stream for you that you've now created as a business income, and you incorporate yourself with an LLC in the United States or the equivalent in your country, and then you'll have the benefits I'll talk about in a few minutes. You can have a secondary income stream in the form of generating signals for people. There's a lot of folks out there. And frankly, I've had so many people come through my mentorship groups, and a lot of them didn't stay with it because they were frustrated. A lot of them couldn't afford it. They quit, and or they just couldn't make it work for themselves. And that's fine. Like I said, I'm a practical person. I know that what I teach isn't going to be applicable for everyone. It requires a lot of effort, concentration, and work. And it's not going to be easy. And I don't have any shame in that. I know the weak will not survive with me, but that's okay. There's other things out there they can dabble in. And once they taste all that other stuff, if the bug of trading has bit them, they'll more or less come back to me in time. But you can generate signals and run signal services. That's why I don't do signal services, because all of the folks that came through my mentorship group, there's a lot of them out there that have the interest in doing that because it's really easy money. Really, really easy money. And I'm talking income streams that are way beyond what you would expect. Now, what does it take to run a signal service? Consistency. And if you learn how to do what I teach in this channel, read the market, be able to decipher what it's likely to do next and be consistent about that, call key levels where it should react, create a signal where it should draw to next. That's a skill set that largely the trading industry doesn't really have a whole lot of that as resources. There's a lot of people out there that do a heavy degree of marketing. In my opinion, and this is something that's probably going to be, sneered at by everyone that has a hard opinion about me, but it's just logic, folks. Have you ever seen an Inner Circle Trader ad? No. Have you ever seen coupon codes when I was selling mentorship? No. So the best rule to growing organically is be genuine. Talk about your limitations, show your weaknesses, don't hide from them, and be willing to be consistent and honest about everything. If you do those things and you make the signals available for at least a month for free, anybody that comes to you, say, okay, here's my window of new membership. You can come in, but you only have 1 or 2 times a year where you'll let more people come in. Otherwise, people come in, they'll abuse the 30-day for free. Okay? Do it for 30 days. Let them test drive it. And if you're good, you won't mind doing that. And if they see that you're good, they'll sign up with you because they know the calculator rule. They know what they have in their account. They know what they're willing to invest in themselves. And they've seen what you're able to do in terms of calling the market. So now you have income stream coming from that. So now look what you've done. You have a job that's paying you. It may not be meeting your ends as you want them to. But now you've trimmed off the fat if you listen to me in the episode 1. So you've reduced some of the things you don't really necessarily need. You've learned how to invest in yourself. And you're taking the investments of applying the money instead of going to an IRA at your job, put it into a self-directed IRA that you control the decisions in. So that way you're taking that money that you're investing in otherwise if you've been doing an IRA. Now you're controlling what vehicles you're investing in. What stocks are you trading? What are you doing with that money? So it gives you control instead of just putting money out there. And I have a lot of people that I'm friends with, and they put money into money managers' hands, and they complain to me all the time. Like, Michael, these guys don't know what they're doing. I told you they don't know what they're doing. They take all the credit when the market goes up, and when it goes down, they just tell you, average in, buy. So they're in a position of what? No responsibility. But they get the credit for when the market just simply goes up, but they don't talk about the downside. If it happens, they'll just tell them to pour money into it. So you're taking the role over from people that aren't going to care about your money, and you're assuming that control. And you're then going to be applying the most of your heavy lifting in your analysis and doing all the effort with building up your long-term tax-deferred IRAs that you're going to set up with an LLC. Why are you going to do that? Because when you start your business income through YouTube, it's going to be very small. You need like 1,000 people subscribe to your channel. And then you can start getting ad revenue. There's a long time I didn't do ad revenue on my channel. First of all, I didn't need it. And when my adult daughter entered the adult world, I said this many times, I love her to death, but she sometimes needs assistance. So many times I take the income I'm getting from this very YouTube channel and I use that to buy their car, fix their car, give them a high dollar furniture makeover for their home in one room or another. And I do things like that. Or I'll use it for vacations, something to that effect. And do I make a lot of money through YouTube? No. I average around right now about $15,000 a month. Now, I'm sure over time that might increase if there's more viewership or whatever, but it didn't always have $15,000 a month. There was times when I was doing $1,500 or less because I wasn't putting videos up. I wanted to see how it worked. And my oldest son said, hey, look, Dad, you should put ad revenue on it and you'll get money from that. Because I was already making plenty of money, I was like, I'm not interested in that. But then I realized that, hey, this is something, it's another stream of income and I don't have to tap into anything else. And it's really like a no-brainer. I'm already doing this anyway. I love doing it. And YouTube's putting ads on videos anyway, folks. So those that complain about you got ads on your videos, all videos have ads. YouTube changed their rules and they said, whether you monetize your videos or not, we're exercising the right to put ads on your video. Well, if they're going to get all the ad revenue, doesn't it make sense that you get the majority of the cut? And that's why I have ads on there, folks. Okay, so anyway, that's an income stream. So in that income stream of YouTube ad revenue, you're doing what? You're growing. Now, you might do what I have never done, which is advertise on YouTube. Is there anything wrong with that? No, not if you are in a position where you have value that you bring to the community. If you have a service that is worthwhile, then hey, go after it. I just have always thought differently. And my overhead on my businesses, I like to keep them very, very thin. What does that mean? I have no advertising expenses. I don't pay salespeople. I don't have people going around repping me saying, hey, this is the most amazing thing. I don't do that. I don't pay anybody in other countries. I don't pay people anything to say anything about me. They either see the value and they love it and they share it because they just are in love with the results, or you have the handful of people out there that just simply don't like me. And there's going to be a whole lot more of that because I'm doing this for free with a level of education that nobody else is doing. And I'm making things practical. I'm going down to the grassroots where the working man, working woman can take this information and apply it to their own personal life. And there's no excuse for you not to be successful then. It's up to you at that moment. But that YouTube income, coupled with and you don't have to do signals, but that could be a potential income stream as well. Signals, if you are good, you can do 6 figures every single month and still not do any live trading yet. So for the African folks that send me emails most of the time saying, hey, look, I'm really in a position where in an impoverished nation, we don't have a whole lot of money here. Things are tough. What would you advise someone like us? What would you do? This. And here's the thing, folks. Those of you in the States that are not burdened with the debt that nation has and pressed upon its people, those things, you don't have that. You have advantages here. And if you apply this same strategy, guess what you've done? Used those advantages the most creative and most practical way anyone can, because you have more resources here. You don't need money to start doing this. You need the skill set. Now, additionally, you can have affiliate program revenue as well. What does that mean? I can't tell you how many times brokerage firms reach out to me all the time and say, hey, you want to start a partnership with us? This is, again, one of those times where I'm going to tell you, please don't ask me. I'm not interested. Okay. I have had lots of money thrown at me and I don't do it. I won't do it. It is what it is. Also, because I'm a YouTuber, when you join the partnership program with YouTube, they make you, I don't know how they do it, but they make your channel available to companies that offer products or services that want to do ads or do a campaign with you. I have had $10,000 offers. I've had $7,000 offers. I had $5,000 offers, lots of $3,000 offers, and I had a couple $1,500 or $1,000 offers. I've had companies offer me full picks of clothing, watches, jewelry, all that stuff. I am not going to do those things, folks. I understand that there's a market for that. I'm just not that person to do it. Okay. But that's something that if it's of an interest to you, there's nothing wrong with it, folks. So if you're going to go that route, I'm never going to thumb my nose at you and say, oh, look what this person did. It's income. Things are about to get rough. So if you have a means of getting income, then do it. The only thing I don't like is when people take my concepts, they rename them, they don't give me any credit for it, and they pretend they invented themselves. Okay? I've already told my own private group, you're welcome to use my logo. You're welcome to tell people that you were trained by me. I don't care. That's one way that you can become viral. And if you have the skill set and you learn properly from me, they're going to know and they'll see it. And they will decide at that point if you have a service that you're offering them and you're trying to do signals, or if you're doing analysis, or even if you're doing market reviews. There's nothing wrong with that. There's absolutely nothing wrong with that. But because I'm doing market reviews, that might be not the best approach because, well, I'll let you determine that. But the bottom line is there's affiliate programs that you can actually make more money that way, in addition to the ad revenue that comes by running ads on your YouTube channel. So now think about what trading has done already. If you learned how to trade, you know how to read the market, you can call it before it happens, and you're detailed, you're responsible about managing risk, theoretically, and You've trimmed down your own expenses, cut out all the things that don't really require you spending that much money each month. You have a little bit more cash because of that. Then you're changing your mindset into an investor, because now you're going to be taking the money that you may not be doing the best with by giving it to a company IRA, and you're subject to whatever the market does. You have no control what's going on, where to move the assets, what industry group, what sector to be investing in. All those things are beneficial. And if you know how to do that, that's advantageous for you. But most people don't know how to do that. Most people don't know how to control their investments. That's what I'm trying to teach you. So that way you're getting control over that. And you're changing your mindset to getting rich real quick in my retail account right now versus I'm building wealth with long-term tax-deferred IRAs, and I'm letting all the type of trading I would be doing short-term and trying to take the money out so I can spend it and look great on Instagram and floss. No, leave that in there. Because if you have the ability, just to say you make 6 to 10% a month, and folks, that's easy. That's ridiculously easy. But if you compound that over 20 years and you're at 20 something, and when you're 40, 45, how much money do you think would be available to you? Cue the calculator. Everybody's stopping the video. Let me see if you just said here. Oh my goodness, I gotta have that much. Defer all that type of stuff. For right now, build yourself up. Your skill set's the most important thing, because if you have this skill set, there's not a list in this category that I'm going to type out, but I'm going to say it here. There are millions of people out there that want a partner. They want a partner that knows how to do this, and they have the cash. I have people approach me all the time, and I'm talking huge amounts of money. Hey, would you be willing to go into a partnership? 60-40. One guy came out and said 70-30. 70 me, 30% him. And these are big, big investments. 8 figures, 7 figures. That kind of money when it's dangled in front of you. I'm not interested in that. That's not the approach I'm going to go. And trading other people's money, that's a very, very, very stressful thing, in my opinion. But it may not be stressful for you. And I teach my students that if that's what they want to do, if they're going to be managing other people's money, they got to get the proper accreditation, Series 3, Series 7, go through the proper lengths that make you legally capable of doing that. Do all the limited partnerships, so that way when you open the account up, you're legally allowed to do the trades. And you both agree, you sit down with a lawyer and have them draw up the partnership limitations and agreement that you have the right to be able to trade that account. And these are the parameters. You're trying to do this. And if you do anything outside of that, that's outside the scope of the partnership. So it'll help provide the means for dissolving the partnership if it becomes impractical. But what I'm saying is there's lots of people out there that will literally throw money at you. Even if you don't have the money right now, learn this skill. Because if you can prove that you can do this, money literally will be made available to you. Okay, in more ways than you can imagine. Also, that's not mentioned here, and you probably see most of everyone talking about it now in the trading industry, is the funded account. So if you have an income stream like YouTube, your signal service, those ideas and your own retail trading account may not have enough money in there to really make any difference in your trading. Put that off for right now. Go through the funded account approach if that's something that you think is applicable for your personal life, and if you're willing to submit to it, let's say it that way. The capital expenditure that you would have in something like that is minuscule versus opening up an account with $10,000, okay, or $20,000. You probably aren't going to do that. Okay, even if you think you've arrived at trading and understand what you're doing here, you may not want to go in and put that much money in there because it's a totally different world. And you might do something wrong, and the market could do something crazy. Wipe it out. Versus going after a funded account and try to get a $20,000 or $50,000 or $100,000 account where you have that leverage available to you and you do the profit split, whatever that company offers. And I'm not going to rep anyone in particular here. That's a better approach to funding and seeding your own retail account. Take that money from a small investment that's limited. That way you're not having all that tug of war feeling. Oh my goodness, I can't blow my account. I can't risk it. Versus small capital expenditure on your part to secure a funded account through a prop firm. Use that to do your payouts and work with that to use that capital to seed your own retail account. That, to me, if I would have had that available to me when I was a younger guy, I would have done that. I would have done that. Okay. The approach that I would do all over again is what I'm absolutely outlining here. I'm using this as, what would I simply do and how would I approach doing it? This is what I'm doing. And this is the stuff that makes people really profitable. This is what keeps you in the business and creates longevity. Thinking about it with a business mindset, not, I want to go in here and do the maximum leverage. I'm not going to use a stop, but I'm going to use a mental stop, and I'm going to know when I'm going to get out, and you're going to get wrecked. You have to treat it like a business, all aspects. So there's all kinds of income streams that's made available to you just by understanding what it is I'm teaching here. And the last goal is to have your own retail account funded with the money that you've made from any one of these or all these income streams. You see what just happened there? You now have no excuse because you may not have money right now. Stop worrying about the money. If you worry about the money, you're not going to learn. You're not going to learn properly. You're not going to develop the right mindset because you're worrying about money. And scared money makes no money. Always. But what happens when you have all these income streams? Are you going to be impulsive with your own retail account? Probably not. Why? Because ends are already been met. You're not feeling impulsive because I got a mortgage payment coming up in 2 weeks. Man, alive. I spent too much with the girl money last weekend. I am broke. What am I going to do? Oh, let's go in there and over leverage $1. It's non-farm payroll Friday. Wrecked. And you compound the problem. Versus, I have plenty of income coming in. I don't need to trade. So now I can be more opinionated and objective about what it is I'm doing anytime in front of these charts and be more what? Disciplined. And that discipline will keep you rooted in sober thinking about when you're going to execute and engage in price action. Then when you place a trade with a live account, you're not worrying about the end result. Because if you do take a loss, guess what? You have all these other income streams coming in and it doesn't change anything. You won't feel rushed to go back in and get that loss back either. Oh, how about that? You didn't think about that, did you? Because you don't think right now how to operate your life as a business. But thinking like this is how an entrepreneur thinks. When I look at something, I think, okay, I want this, and how am I going to pay for it? I just looked at a piece of property. I really liked it. My wife loved it. I didn't want to pay the price they were offering, so I came in $120,000 less. They didn't want to come down there. They just stayed right at ask. They're going to regret that. But the point is, I treat it as this is what I'm willing to spend. And if they don't want to meet that price, I'm not buying it. Now, a younger me would have been like, all right, they went back to ask and they rejected my offer because I gave them a 7 o'clock on Sunday that just passed. That's when the offer expired. And it was $120,000 less than their asking price. And I was flexible with the settlement date because I'm not pressed. They waited till 6:40, 20 minutes before the offer would expire, just to come back with full asking price and a 60-day closing. Because I'm an entrepreneur, I'm objective about what it is I'm trying to do, and I'm also rule-based. This is all I was going to spend. So no, I pulled the offer, it expired, and the market still has that house for sale. Lovely home. I'm not buying it for the price I'm not willing to pay. It's got to make sense monetarily. A younger me would have impulsively said, oh, All right, you beat me. I'll pay asking price, because I wasn't money management minded. I was new money. And as long as I had the money to pay for it, I didn't care if I was paying a premium for it. I didn't care that I was being taken advantage of. So I'm teaching you how to look at things objectively and also bring that mindset into your trading, because if you do that, you will have better control over your psychological and emotional tug of wars that you'll go through, that everybody has. But I don't feel the impulsive nature that I did as a 20-year-old, because I have grown in wisdom and knowing that I don't need a trade to pan out for me. So I can be what? More patient. I can wait for it to trade to that fair value gap. I can wait for it to go to my targets, and I don't feel like I got to get out because it's been 12 days since I had a profitable trade. Obviously, I'm being facetious, but you probably are snickering with me, even though it might be painful to hear that because you can relate to it. But those things are mastered when you master yourself. And when you master yourself, that means put all the effort into your skill. Hone that. Once you have that skill, trust me when I tell you, money will be presented to you in more ways than you can imagine right now. And I'm just glossing over the obvious ones here. There's lots of others. And obviously, everyone has these debts, these ends that must be met. So some of you actually mentioned in the comment section in episode 1, I forgot credit card debt. No, I didn't forget credit card debt. You'd be surprised how many people use credit cards to pay these very things here. And I wanted to talk about credit card debt in this episode. So let's talk about that now. Imagine you adopted this mindset or approach or model of thinking about how you're going to go into formulating this trading industry as a business for you and using some of these ideas for income streams. When you do that and you incorporate yourself, you want to try to secure yourself one credit card. And that credit card is for all of your business expenses. So when you have that credit card, all the expenses that you spend through business-related expenses, they'll be in one central account. So that way, for accounting purposes, your accountant can do all the deductions that are applicable for your expenditures if they are warranted. Not everything's a tax write-off, but I'll touch on a couple things here. But when you are a business owner and you incorporate yourself, you can use the tax benefits of tax deferment. Now, when you're at your job, they give you a maximum contribution amount that you can place into your IRA. But that's it. That's all you can do. And then your employer meets it to whatever they match up to. When you're an LLC owner, okay, you can put up to $52,000 or 25% of your salary every year. And you place that in there that's tax deferred for your investments. So that's lowering your taxable income. That's a benefit of being an owner of a business. So when you incorporate yourself, you can do that. Also, if you are a trader and you've been doing it for a while and you apply, and if you get the trader status tax treatment applied to you, you have a certain dollar amount. And I'm not going to cover that here because I'm not going to act as a CPA. I'm not licensed to give tax advice. I'm just giving you information so you can go to your CPA and ask them about this. But trader status allows you to have a specific number as a kind of like a standard deduction that's applied to you as a trader. So that's also an advantage that regular retail traders don't have. Whatever you make, and most people don't make money as a retail trader, but if they are profitable, they don't have any kind of special tax treatment. And in the United States, we have that here. But you'll have rules that you have to meet to maintain that trader status. And I'll leave that for you to go talk to a licensed CPA. Green Trader, tax preparation guy. You've probably seen some of his videos in scrolling through YouTube or whatever. I think he has the best. He's not my accountant, but I think he has the best in terms of resources and does a lot of free stuff and webinars and things that are very informational and informative to the average person. And if he doesn't answer it himself, I'm sure he'll make it available for where you can get the information. But you'll probably have to pay for that as a service. But there's a lot of resources that are made available by him as well. But tax deferment through long-term IRA trading, building your wealth that way, not trying to build your wealth with retail accounts that are going to be taxed at, which will be most of the time taxed at a short-term capital gains tax, which is essentially basically close to what would be normal tax brackets. I'm not saying identical, but just think of it like that versus a better tax rate when you trade longer than a year, when you hold a trade longer than a year. That long-term capital gains tax is a little bit lower versus the short-term capital gains tax. But all those things are for a CPA to answer, but you get better treatment as a business owner doing it. When you own a business and you have LLC, whether you're just doing YouTube or any of the other things here, if you incorporate yourself, your company car, okay, I have lots of cars, and I got ragged a lot when I would talk about I had a Corvette, and I have a 2019 Corvette that was initially a company lease. Okay, so I was paying $1,270 a month, which some of you might think, oh, that's stupid, that's too much money, blah, blah, blah. I'd rather spend that and drive a car that I enjoy and not pay that in income tax. So I'm enjoying something, I'm getting the tax benefit of doing it as well, writing off that expense. Whereas you and your car expense, are you able to write that off going to your job? No. So I have vehicle costs when I have an image like the YouTube channel. Why am I on YouTube? Because I'm a public figure now. I'm somebody that people can go to and watch. Okay. Because of that, there's a certain measure of image that I'm allowed to use because of that very purpose. So when I buy these cars that would otherwise not be viewed as practical, I can write them off because it's part of what? The image, the YouTube. I'm not out here flashing, but I have them. I make mention of them. So it's part of my what? Image. Now, I'm not on Instagram because I don't think it's the right thing to do. So I do as least as I can to make sure I meet the minimum thresholds for tax purposes. But when I have that car payment in the form of a lease payment, which I don't now because I paid the car off, the lease expired, and then I outright purchased it. So a car purchase that's still a company car, they can be depreciated. So I'm getting the maximum benefit as a leaseholder because a company lease car payment, that is 100% tax deductible. When you make your car payment working for wherever you're working at, let's say you work for Amazon, okay? I'm not saying it's a good or bad company to work for, but let's just say you work for Amazon and you have a car payment. Are you able to write off the expense for your car payment? No, I can. When you get your car oil change serviced, do you have the benefit of writing that off while you're working for Amazon? No, I do. If I replace my wheels on my tires, that's a write-off for me. If I rent a car, say I don't want to use my vehicle and I'm going to be traveling, which is how I do it. I don't take my cars very far. I'll rent a car. That rental car expenditure is a write-off for me. If you rent a car working for Amazon, guess what that means? You're eating that entirely. I can write that off. Gas, 100% write-off for me. Look at gas costs right now. That's a loss for you. That's why I say all the time, and people think I'm bragging. I said this back in the late 90s when I was teaching people one-on-one. I didn't care if crude oil went to $100. And I saw it in my lifetime. But I didn't care if it went to $100 and gas went to $10 a gallon, $20 a gallon. I don't care. I'm still going to drive 8-cylinder cars. I'm going to drive what I like because that's just going to be a write-off for me. I don't care. That's not me bragging. I'm not affected by that. You would be, and you probably are being affected by that. But that's a temporary problem that's easily fixed if you listen. So all vehicle costs for me are write-off. And that's why I don't have a problem with having high-dollar cars that have high-dollar expenses behind them because that's a write-off for me. Instead of Uncle Sam getting that money through taxation, I'm lowering my taxable income by having things I like and enjoy. So, next category. I could go on and on about that. But utilities like cell phone. Your cell phone bill comes out of your pocket. But when you incorporate yourself, that's a 100% write-off for me. I don't care how many people talk to me all around the world and run up all kinds of costs. I don't care. The fuel, like I mentioned before, nothing to me. Absolutely nothing. It's a write-off. I have to spend the money, yes, but that's a deduction in my taxable income. In healthcare, that's a write-off for me. When you have a job, you can't write those expenses off like a business owner can. See, that's also a fearful thing for people too. They think to themselves, I would go into business for myself, but I just don't want to pay for my own health insurance. That's stupid. Because if you plan on being in business, you hopefully plan on being profitable and successful. So a profitable, successful business can afford its own employee premiums. And if you're a sole proprietor or a single owner of an LLC, like there's no partner with me. Like I'm like Inner Circle Trader, that LLC. That LLC is just employing me individually. And that salary that I pay myself just through that one LLC is $200,000 a year. So that $200,000 a year salary allows me to do up to $52,000 invested into an IRA that's 100% tax deductible. So now my $200,000 salary that would be taxed at $200,000 is what? $148,000. So I've already crushed it in terms of tax and benefits of being a company owner. Now, the government didn't get all the taxes that they otherwise would have done if I had a job somewhere else making $200,000 a year. And it's all legal. That part's legal. And that allows someone to think whether or not just doing a retail account is the right way of doing this, because it's not. You have to incorporate yourself. And when you have income streams like this, you have to sit down and figure out what you're going to do with the income. Not just how much can I spend or how much I can afford to live lavishly. I could live a lot more affluent publicly in front of other people and onlookers, but that's stupid. That's dumb. I want to make sure I have money forever and my family members have money to draw on even when I'm gone. That's how I've designed my life. Now, I'm not here to be Instagram rich. I'm not here to try to say, look what I'm still paying mortgage payments on, and I got to pay payments on something that's being built in my backyard. I ain't paying car payments because I'm broke. I paid, and I don't have any company leases right now, but I'm about to probably pick up one. I pay vehicle leases because I get the maximum tax benefit of it, and I'm still driving the same car. And if I don't like the car at the end of the lease, guess what? It goes back to the dealership. Thank you very much. Give me a new one. And I had 100% write-off. As an employee, you can't do that. You're eating that cost, and that's it. And you're still at the same taxable income rate based on your salary. So when your income is through investments and through a business, everything changes. So I end up paying less taxes than someone that has a job. And you can argue and get mad and say you're a jerk. The only thing I'm doing is what everybody's main focus should be, is how to pay legally the least amount of taxes. I'm not avoiding paying taxes. Believe me, I pay a lot of taxes monetarily, but on par, I pay less taxes than someone that has a high-paying job. Jobs are not the answer. When I go out to restaurants, well, in 2021 and at the end of this year, at the time of this recording, it's August in 2022. In December 31st, 2022, the temporary 100% write-off for restaurant meals expires. So for 2021 and 2022, anytime I go out to a restaurant, it's 100% write-off. Now, contrast that with you take your family to McDonald's, which is poisoning your family, by the way. But if you take them to the drive-thru and get McMeals or whatever it is, I don't even know what they call that stuff anymore. That stuff that you're spending money on, probably too much money really, that's just coming out of your pocket. And you can't deduct that from your taxable income at the end of the year. So when I take myself to Ruth Chris and I talk to someone that may be accompanying me and my wife, and we're talking about team building or production ideas or lecture ideas, okay? As long as I'm talking about business and my business, that meal fits the minimum threshold for what? 100% write-off. So if I drop $350 on that meal and I enjoy the presence of a company associate that may be working with me as a as an agent but not an employee, or I'm grooming them to do a service for me through a 1099 relationship, or I'm taking advice or counseling someone and I take them to dinner, I'm able to enjoy that experience with, that goes without saying, but every bit of that receipt that I'm paying and tip, that's a 100% write-off to me. Now, normally, this should be going back to this in 2023, unless things get changed again. But right now, it's at 100% write-off. Prior to 2021, when they changed the rules, it was a 50% write-off. So if I spent $300, $150 of that could be a write-off. Think about that and how much you waste when you go out to restaurants. I don't do a lot of restaurants, okay? My wife loves Chipotle. My wife loves this place called Kobe, okay, like a Japanese steakhouse type thing. I don't eat steak. I eat crab, chicken, and fish. But when we go to Ruth Chris, they have the best crab cake down on Water Street. So if you're thinking about it, if you're local, try that place because they have the best crab cake. No, they didn't pay me to say that. So, but restaurants, while you have an LLC, that's an advantage. It's not a out-of-pocket expense that you don't get anything for. I'm not afraid of spending a lot of money. So these things are different when you have the business mindset. Clothing. Why do I have a YouTube channel? Because when I buy clothes, now I can write my clothes off. So when I buy nicer threads than, the average person, that is an expense. You don't see me parading around on YouTube every single day, but you started seeing me show myself, right? So that allows me to do what? Allows me to write off my clothes. If I don't have a reason to have those clothes, then I can't write them off. So the YouTube channel allows me that. Why does ICT have to have a YouTube channel if he makes all this money? Because I'm using the tax code legally. That's why. You're financially illiterate. Okay? Listen to me. I'm trying to help you. Okay, if you don't want to like me, that's fine. But I'm sharing stuff to help you live a better, more profitable life. Operating it like a business. And entertainment. If I happen to have, again, an associate in the industry that either is counseling me or I'm counseling them, and we happen to say, hey, look, let's go to a bowling alley tonight, and let's talk it over while we're playing a game of bowling. So we're doing what? A corporate event. We're talking about business. The conversation may only last 2 or 3 frames of the game. But my niece that was spending the night that weekend, because they have to come with us because we don't have a babysitter, they are all engaging in that same event too. But it's 100% write-off. So when you go into trading, you don't go into it with Instagram rich looking image. That's not the right way of doing it. You want to go into it with, how can I turn this into a business? How many streams of income can I turn this into? So that way it's not limited to just whatever I make in my own account. Because if you do that when you're first starting out, you are putting so much unnecessary pressure on yourself. When you start to see these things build up, okay, and the income streams grow, it gives you more confidence. And that confidence does not translate into overactive trading, over leveraged trading. It turns into a sober-minded, principle-oriented investor that makes decisions when it's the best time to do so and not feel rushed or fear they're missing the next big thing. I'm not impulsive about missing the next move. I don't care. I'm in this to make money. That's why I'm doing it. I'm not here to look smart in front of all of you. I did not get into trading to impress my in-laws. I didn't get into trading to impress anybody. I got in this industry because I wanted to make money. And I didn't want to work the rest of my life. I wanted to be retired in my 40s. And guess what? Hot dog, I've done it. You can do it too. And you don't have to wait that long. But you got to be realistic about how long it's going to take you. Because you don't know and I don't know. And I'm being sincerely honest with you. I don't know how long it's going to take for you to get this. And some of you, listen, you might not be able to do it. And it's not my fault. It's not the system's fault. It's not the market's fault. It's something that you're wrestling with. And you have to determine what that is and beat that, overcome that, and then come back to trading. And that's the most honest thing you're going to ever hear from somebody that's done this for 30 years and trained hundreds of thousands of people. The common denominator with people that can't do this is it's always them. There's something in them that they're wrestling with, they're impulsive about, they are impatient about, or they're just trying to bring something they already think they know about the marketplace and ignoring the things I'm telling you. You can't blend, okay? You can't bring Elliott Wave and harmonic to this and think you're going to get a new creation. You're going to get something, but you're not going to get the blue ribbon results that you're expecting. So hopefully I've been able to open your eyes and understanding and expectations about how to go into this and apply a better mindset to this. Not just thinking, give me an order block to buy. Help me find a fair value gap that's going to be the next move. Okay, there's much more to it than that. And obviously when you get your taxes done, that tax preparation cost that you have to eat now as an employee working at a company, that expense, you just pay it and there's no benefit to using it as a deduction in your costs of living. That tax preparation cost that I pay, which is about $7,000 a year, that is a write-off for me. So that expense, while it may sting to hear that, man, I wouldn't pay $7,000. You'll pay $7,000 when you have businesses too. Okay, this is the way it is. But that $7,000, I don't even look at it like, oh, I really wish I had that $7,000 because I have multiple streams of income coming in, and that's just the cost of doing business. But that cost of doing business is being deducted from my total taxable income. So my taxable income, every time I spend money, it's lowering my tax burden. So I want to spend money wisely, but I want to spend it in ways where it allows me to pay less in taxes legally. So, like I said, there's a way to do this and do it with a business mindset versus going in there like a retail Rick thinking, here you go. I got enough money to put in this account. Let's roll. It's casino time. And let's see what happens. That's not a business mindset. That's a gambler. So there's much more to this that requires a much more mature approach going into it. And if you have not adopted this mindset going into your trading, this is how you should start doing it. That means you probably have to stop trading to develop this mindset. Put it to paper. Like I said in the first episode, go through, what do you have to pay each month? And what are those things that you're paying right now that you really don't need? Get them off. Don't spend that money there anymore. Lower your expenses and start preparing to do what? Think like a business owner. Credit card debt. I'm certain there's lots of that out there in this community. When I was a younger guy, I had credit card debt. In 1998, I had to file bankruptcy. Not for reasons because I couldn't afford it, but I did it selfishly to avoid a gold digger. Okay, and that's another discussion at another time. But I talked about it when I was doing that series. If I could go back and tell myself what I know now, it's a YouTube series right on this channel. Credit card debt is a stranglehold. And you want to do the best you can to get out of that. So if you create one of these income streams to attack that debt, there you go. If you have a signal service and you have the YouTube generation of ad revenue, or if you do an affiliate program, once your channel gets big enough and people start approaching you, maybe your channel will do those product placement things that other channels do. And I don't look down on any of them, folks. They have ends to meet. Who am I to say, oh, look at them. Look what they're doing. They're talking about a generator and they're a so-and-so type of channel. Who cares? You don't live in that person's life. You're not walking in their shoes. You don't know what it takes to make their life requirements be met. There's too many judgmental things in this YouTube community and on social media. Everybody wants to talk about everybody else, say this and that about them. I guarantee you, if you had a closer look on how they're living, you'd be shocked. And the only thing I'm trying to do is empower and lift you all up, because this type of information isn't made available. It's always get rich, all about image, and nobody talks about running it like a business. Not one other mentor out there is doing this. And all I'm trying to do is be the practical voice of reason. I've been here, folks. I've done this. And you've already seen enough of just the YouTube community and on Twitter that people have used what I've taught for free this year. And they're able to do what? They're passing funded accounts. They're getting withdrawals. Real money, folks, not demo dollars. So this lesson is going to be helpful to them too, because I'm certain that they didn't think about it like this either. And now you have it. So in the next episode, I'm going to sit down and give you a plan of what it is that I would personally go into doing if I just started eking out the understanding of how to be a consistently good analyst, and going in, how would I go in to attack the money-making aspects of it with real trading? What would be my trading plan, my model? And that's what the third episode is called, the plan. And then on the fourth episode, we'll talk about live executions and the real money part of it. And hopefully you found something in this one insightful. Until I'll talk to you next time. Be safe.